Okay. Just loading up, guys. Right. Done. Ah, wow, everyone's joined so quickly. I wasn't even looking. That was super quick. Right, good. Hello. How you doing? How's everyone? How's your day been so far? Let's have a look at the DAX very quickly. I was looking at pound yen, but also looking at the DAX. Gold, yeah, gold. I see gold doing something. Let's pull this over here. Let's get this out of the way. Like that. Yeah, that's better. And how do we go on here? Like it's on its chat. Alfred, hello. Benno. Benno. Who's this? SLS Energy. Yeah, hiding in the bushes. Is that Shenik? Amir? Mr. JVC?
Hi there, sexy.
Alright,
This
yeah.
action.
Yes, we know. That's strange. Right, let's get this over here. That's it. Pull that like that. Alright, so this is euro dollar. We can scrap that one. That might do a big tumble all the way back down again. Might just remain range bound. Let's have a look at CAD yen very quickly. CAD yen. That was interesting. Right, good. Yeah, hello everyone. I know there will be some others joining us at some point in the next hour. So that's cool. Let's pull that to there, like that. Let's move this over here, scrunch it up because don't need to worry about it. There you go, like that. Yeah, perfect. Pull that down like that, make it even smaller. There we go, done there. Perfect. And scrunch up the chat as well so I can see your conversations. Swiss yen. Let's have a look at Swiss yen. Ah, cool. Oh, Fusion. Alfred, hello mate. How are you? Good to see you. Let's have a little looky. Swissy. But before we digress, I want to have a look quickly at the NAS. The NAS is good. I like the NAS. And the DAX, the German DAX. This is the German DAX. This is good. There we go. I want to put a little short on here on the German DAX. Gonna go and put one on here. 15, couple of little positions just for a bit of fun, and we're gonna do do this. Go like that. So just type here. So go here. Shorting the DAX live around 141.15. See, get a little something on this. Where's my German DAX? So German 40. Yes, a couple of positions. Right, stick that on. Looking for 382. Well, it's been sitting there, hasn't it? 1, 2, 3, 4 hours. So I thought I might have a go. This is what it'll look like. I've been eyeing this up for the last sort of 20 minutes or so. It hasn't really done anything, and then we had the last hour. We'd had a nice little dink down. In terms of stop placement, really you're looking at so that's 60, about 60 really. So about 40 something point stop loss. There you go. So just happened to be something that was quite cleanly set up, because you see here we're not sideways in the market as such. We've had a really nice move up. We broke the 382. At the same time, you notice MT strategy. It's a good MT strategy setup, really. The way it's moving. So this is a 1 hour. So you always look at 1 hour or above. I'll have a look at Swiss yen as well. So DAX short 764 strategy. I noticed that these European markets, they made some movement, and it was quite interesting to see. Like, we had a nice uptick, and if you look at it on the 1 hour, you know, we've been, the DAX, one of my one-to-one guys here has been trading the DAX quite a bit. Noticing that recently we've been seeing it just do a 618 kind of strategy. 618 to 618, whatever the range is. So it wouldn't surprise me. This is the first time I've seen it actually go above the 618 and stop at the 764. So I thought, okay, let's have a look. You know, let's get involved. So 113,800 works out as a really nice target, like that. Let's have a look at the higher time frame. So monthly. Monthly's been trying to edge up, but I think it's just going to collapse. Getting a bit of a push up this week since last week. Again, just feel like it's pushed up for one more kick to the downside. So you go down, you know, that whole kind of like wave 2, wave 3 kind of price action, and then maybe curl over. Yeah. Where are we? Let's have a look. How many people have we got joined us so far? Oh, here we go. It's alright, isn't it? Oh, we've got 20 people. Near enough. 20 people, not a lot, but it's enough. So any questions? So yeah, look, daily, and then it's been really nice. Weird one though, kind of gapped up. The volume, as seen for the whole week actually, when we look at it on a daily as well, those white candles, the reason it's white is because volume is very thin. So when we refer to the awesome oscillator, the reason we use the awesome oscillator is because of the simple fact that it's volume. It's not an indicator. Well, it's an indicator, but it's indicating how much volume there is. So are there more buyers, sellers? You know, is it going on a bit of a bullish move? And each one of these, just to reiterate again, the power and the usefulness of this indicator. You're looking for bars, 8 to 12 bars. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Quite nice, 15. It wasn't strictly unbroken, so you see there was one that slightly changed sentiment, or looked like it might change sentiment, but it did still remain bearish. So I'm just thinking about the same idea here, where we might get a kick up, broke the trend line, and then dip back down into it, and then we had a bit of a pullback as of yesterday into today, bit of an upbeat move, and yeah, just at the same time though, volume, not convinced. You know, I'm not convinced with the uptick, the upward movement. It's a bit questionable. The volume's not there, and this is on a daily. So the useful thing about this is the volume indicator. It's collecting data on a, in this case, on a day-by-day basis. It's, you know, saying, okay, buyers, sellers, etc., bullish, bearish. It's really useful when you look at it on an intraday, from an intraday point of view. So if you're looking at, say, the 4 hour and the 1 hour, this is the only time really that we are interested in looking at time frames as opposed to the ranges, so the highs and the lows. Because a lot of people still ask me, you know, should I view this on a 1 hour chart, 4 hour chart, 15-minute? I was like, well, it's not about the time frame. It's about the range. So as long as you can see the range. So here, this is 4 hour, and you can see where we've had some nice movement up to the 618, and then we had pretty much a 61.8 correction. So 618 rally up, and then lovely bit of retesting the previous high, previous structure, and then sold off. Best part of 61.8. It's quite nice. Now we're up. It's the first time I've seen it sort of break up through. So I had a little glance this morning, but nothing major. Went to the gym, come back, and it hasn't really moved. I can see that volume is trying to tick up with momentum. So what's this one? 382. Okay. So yeah, we'll have a go. It's like a head and shoulders forming. So we'll look at that as a secondary. Let's keep that on there. 4 hours trying to kick up, momentum's trying to kick to the upside. So if it breaks, it breaks. So we'll drill down to like a 1 hour chart, and as we go into this new hour just before the US opens, well, we had 19 people and a couple of people have left already. Okay. Right, yeah, so let's just see what happens here. Drill down to, okay, 15 minutes. So we had 15 minutes, it went down, pinged up. Still bullish on a daily. Have a look at it on a 4 hour. Oh yeah, let's adjust this on a 4 hour. Okay, so we'll go like that. I'll tell you what we will do. We'll just go there like that, like that. R2 as well. That's interesting. So we've been up to an R2. Really, then it has no business going above all of this resistance unless it's intent on continuing to go long. I think in 15 minutes we might find out what it decides to do. Volume is very thin, even on a 4 hour. Let's have a look at the 1 hour. Okay, that one's done. That one's done. Let's pull it back, don't need them all like that. Let's put it a bit more central. There we go, like that. And then let's just measure any drop back down within the mix, back down into the range. So we'll go like that. Yeah. You want to see this next hour candle not go up and break above sort of 50 really. What's it looking like on the opening on the 4 hour? So opens at 151, highs 161. Yeah, so again, so that's the DAX, that's where we're at. It's had a little bit of a retest as well, a couple of times, 3 times. If you look at it like this, 1 little drop back on the retest, that was 2, and then a 3rd time was slightly lower, 3. Actually, the 3rd time is that's it. Right, so just keep an eye on that. What you can do as well is where we've had this last kick up, so it pulled back, and then we have all this volume that's come in. We can measure that as well. Quite often you'll see like a 764 down very close to that 382. To be fair, we may only even get as far as a 618, somewhere like that. But any little drop, definitely look to then just move the stop loss to break even. Okay, that's cool. Yeah, alright, that works. Go there and yeah. Hey Mark. Yeah, so two positions, 0.5% risk. Let's get this. Where is it? Where's my table? Did you have a look at that stop loss table? So if I bring that over here and stick that on, so I'm doing all these extra little bits and pieces because I'm just looking at people that are doing these prop firm challenges, trying to help them out. They're very, you get very wrapped up in those those challenges. They can really preoccupy you and distract you almost. You need to be quite mindful. So what we did is we came up with a nice little table, and yeah, we said to manage your risk. So generally I'll dip my toe in the water, maybe if we use 100k as a standard. So if it was 100k and say there's a 40 pip stop loss, open up 2 positions, £6.25 positions, equates to about £12.50. I think it's slightly higher than £12.50, but yeah, give or take, round it down. Always round everything down. So maybe open 2 positions, 6.25. That's half the initial risks. It's 0.5%, 500. And then what we can do is if it starts to play out, if it does move in our direction, we'll load up. So like here, for example, now we're watching the way that price is grinding up. It's done a little pullback, and then we're going up. So we'll drill down to a 5 minute, and if you watch that 3-step approach, this is what we'll do. We will scrutinize this current price action. So put it under the microscope, just have a little look like that and just see what's going on. Ideally, again, this is where the 764 really comes into its own. That's placed at, works out to be about 14,145. Got a 618 here as well. So ideally, in an ideal scenario, we just want to see price do a little Elliott wave kind of retest. So go down, wave 1, impulsive move, get some sellers in. Then it goes up to retest the high, and on that pullback here it should fail. And then if it fails, it should drop from like here. So we should see something like that. Let's have a look. Where's my... This is what we're looking for. So we'll get that impulsive move down, then we have some sort of a move up like that, and then off we go kind of thing. This 382 is a good little marker, and all of this range, so this entire impulsive move up, is in itself a pretty good marker. If it broke, you see, if it broke structure here, if it changed sentiment, it would come down here, it would test this 382 area, and it would become bearish on a break of this area, would basically become bearish. Oh, let me just stop there. Is it gonna... Okay, good. Yeah. So it really helps when you put the fibs on, because they just help to track the price action. Let's have a look at the rest of it. So your questions. Travis, hello mate. Hey, good to see you. When it comes to prop firm, better to risk from daily drawdown limit. Example, in 100k we risk from 5k risk or overall fund. It's not work right. We'll see. Again, prop firms. I don't know, but I'm going to put one on here. I'm going to just put another position on the German right now. It's about 20. Where are we at? 30, 34, 35. Just going to put a little position here, and the stop loss is at 60. So we've got a much better feel. So again, work out the stop loss. So 35, if we do that, quick calculator, or in your head. As a table, giving you a guide, again, if you had like 100k trading pot, if you had 10k, it's the same thing, just take off a decimal, take off a 0, don't you? So we're looking at 25 pips stop loss. So we round it up to about 30 pips. Based on that extra one, you could chuck one on here. It wouldn't be 1660 because that's 2 full-blown positions, another 0.5%. No, what I'd do is I would put on something like £8.30, maybe £8. Yeah, so 0.8 or 0.83 in terms of lot size. Whereas this one was I had 2 positions on here, would be like 0.62 or just 0.6. You don't really have to work the pence, just round it down. That way you're always risking slightly less. Veronica Gomez. Right. Any trading questions? Why are you, Veronica? This is why we don't do these sessions. You just get this nonsic. Bye bye. Right. Stupid idiots, say. I don't know. For 300, you can time out people. How cool is that? It's not even their real name. Right, Swiss. You want to have a look at Swiss, don't you? Hello, guys. You alright? Hey, Alex. Yeah. Hey. Holgi. Let me go Swiss yen. Swiss yen. Swiss yen. We had a bit of fun yesterday, didn't we? Trading the Dow. Still, mixed bag of results. You can get very excited with it and just have to kind of chill. So we had a nice big sell-off, turned into a big sell-off on Wednesday, which just meant that coming in on Thursday, it was a case of every time price goes up, short it back down again, and really looking for, looking for a really good sell-off. It kept stalling around, putting the market at 31k, and it kept stalling, didn't it? But that was okay. Little flicks to the upside, we just short it back down again. So let's have a look at this. So you're doing, yeah, Mark. When I'm scaling in as well, I tend to put lots of little positions on anyway, just because if you try and scale in, the larger your account, when you try and scale in with big lump sums, it won't fill. It does fill, but it ends up breaking it down into odd sizes. Don't want odd sizes. I just like to have nice round numbers to work with. But yeah, as long as you're working 0.5, and then if you stick another extra little bit on, like I just did, then you're looking at maybe 0.75 in terms of risk. So work out 14,160. It's quite a tight stop. I haven't put 0.5% on. I've probably put less than 0.25% on right now, just because I'm just doing it for illustrative purposes more than anything. I don't really need to do anything today. So we've had a good week, couple of decent days. Yeah, so let's have a look at this anyway. Swissy. Divergence plus MT. Divergence struck 1 hour, shared in Discord too. Okay, so 1 hour divergence. Right, yeah, see the divergence. So we've gone up, we've pumped up and gone like that. That last pullback. And then back down into the mix, what we're looking for, isn't it? Yeah, Mark. Yeah, no worries. We can have a look at that. Let's measure this whole move up for Swiss yen. So there's the first move, and then we had a nice corrective pullback, about 618, and then we broke and did a whole fib extension. There's probably a thing there as well. Let's get rid of that. Probably had like a nice extension, but we didn't have divergence then. Nice extension, no divergence, just healthy volume on that next move up. So the second, oh wow, yeah, we're tanking. Bit of a spike down. Is there news? Oh no, it's just the open. Okay, that's cool. Go on then, drop everything, fall off a cliff. Let's go. Would be nice. This has just dropped into profit. Okay, that's cool. Yeah, back to previous structure. That would work. Right, good. I'm going to take some profit off at 14,100. Well, if it gets down there. Where are we at? 15. Back to entry, really. Let's get rid of that quickly. And let's go like this. Just want to put this on. So one wave up, pull back, 2 waves, 3 waves, 3 wave move, really nice movement. See if it can do a nice little drop down. Big spike down though on those markets at the open. And we're back up to sort of 25. I'm just trying to read 50% of bigger range. What I think about gold, I think gold is, there's no setup on gold, it's just sideways. And it pumped up yesterday, it hasn't pumped up to a level, you know, where I can do anything about it. Right, good, we're dropping. Let's this one again, it's again, this is a bit like gold. It's gone up and gone up. It might do a little corrective pullback. It's not really off anything. Maybe you're saying like 50% of that range. Okay, let me just have a look at this trade on gold, and then that's what I wanted to see pretty much. So we've got that extra position on. So, and I didn't take anything off because I was just distracted. And it's just bouncing around. Right, can I? That's better. Right, where are we at now? 9, 10, 764. I might just take some off just for the sake of taking some off here. The 764, yeah, that's right. So should have had something there. So extra 1 going to start closing some there. Around 08 or so. Yeah, a bit of extra pocket money, and I've just left those original positions open. There's a couple there, because we're averaging about 15, so they're at break even. But I've just taken some off where we had the price went up nicely. You know, wave 1, wave 2, and just because we had a nice little dink down. And then what I'll do is move the stop loss. Now that we've had that pullback, maybe move the stop loss to like 45 or so. We came within 3 points of that little 764, but you know, we've allowed it to go back up, making a lower high and curling over. So you know, bringing down, shaving 15 points off, something like that, and just moving the stop and taking some profit off as well. Couple of bits and pieces. Should have given you at least 15 plus points on a little scalp, but it's Friday, scalp day. And entry on the other ones I think were around 35, so that was quite nice. That's more like 30 plus. Right, we're just holding, and stops to 45, and let's see what it does here. Might even see again, might even be able to move. It's a bit kind of sucks really. Trying to see if I could get my stop loss down to entry. But in any case, right now, based on what I did and how I scaled in, did a couple of positions and then added a couple of other little small positions higher up, banked those higher ones and took pretty much everything off, just left those original little positions on, which are just sitting around break even, or just about, yeah, my entry is about 15, so it's alright. So if it can just drop and break 14, that would be great. 14,100, that would be really good. Getting a little bit of a sell off, we could let this ride down then. And then we can move the stops. 15. 45. We're trying. I'm going to move my stops to 15 anyway. On my last ones, there we go. Break even. Done. That's it. Just about there, like that. Again, we've let it go up. We've let it pull back. It's breaking that. I was trying to break the 764. We've had that nice little wave 3 move up. So wave 1, wave 2. Sorry, now wave 3. So we're looking for down here would be nice. Nice extension. So we can let it ride. turning up late. Yeah, no worries. So let's get rid of that. 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 So you see the way I put everything under a microscope, so to speak. So every the range is basically, there's the high low. There's a pullback. So it got in short around 15. Then it started pushing up. This is what we call the 3 option rule, and it's part of the Elliott wave theory. I'm just breaking down price action. So what we're doing is we're doing a whole breakout here, breakout of structure, puts in the marker, doesn't quite retrace 38 something, and that's cool. Then we're leading up sort of 5, 10, 15, 20 minutes of just retracement leading up to the open, the US Open, and because this had a nice little setup, bigger picture 764, yeah, it just made sense to scale in and add some more positions. So like some of the guys was asking about more positions, so adding positions there. So that's why I don't put all my eggs in one basket, because imagine if you loaded up all down here because you don't wait because you're chasing it. It's understandable, right? The fact that we get a pullback and we start seeing it pull up, then we just sit on our hands. It's like, it's a good sign. We see it go up. Basically, then we're never sort of sat here with that element of doubt. You know, what if it goes up against us? What if it retraces? Well, it's answered that question. It did. So that's cool. So then it's like, right, good. Okay, we've given it a chance to retest the high. It's making a lower high. We're changing structure. Happy days. You know, put a trend line on here for reference. You know, something like that. This is a 5-minute time frame, but it's not even all there. So what did we do? We had, you know, I should have taken a little bit off just as it retested that low. You know, that could be it. You know, that actually could be the low. But it's right, stops at break even. I took some profit off. If you took some profit off, quick London Open trade, US Open trade session, job done really. Stops at break even on the last ones. Yeah. Just closed one at 14,100. So I've got one position running at break even. I'm just going to leave that on there just to see. It's Friday afternoon. Try and wait till Friday afternoon to make all your money. You're mad. Yes, it's supposed to be a bit of fun. No, the DAX didn't short the Dow because it could have shorted the Dow. The Dow done a nice little 382 correction as well, but that's fine. Just this was already set up, the DAX 764 strategy. So yeah, stops are now to entry on the German DAX. Some nice quick profit banked as well. Yeah, all done during the live session. Right, good. So let's get this out of the way. Wave 1 or wave 2. Does it have to go right down to wave 3 down here? Could do. How much importance do you put it on a 5-minute chart on a smaller range? I mean, I'm out of this anyway. I don't really put too much on it. It's just, again, scrutinising the price action on the smaller time frames to help me manage the stop loss, manage the risk. So we know when we start off that we've got this move down, then we watch for the pullback, so we can then adjust our stop. So if we're getting in somewhere like here, that was ideal, you know. And then you see I reserve the right to add more positions, because by doing that, what I do is I'm like thinking, okay, I want to get some skin in the game because I see the move potentially setting up, but you're never quite certain. You're looking for high probability. It's like, okay, it might flick up one more time, might even go high, put in one more high, stop us out. You know, there is sometimes that manipulation. It doesn't mean that if it does that though, you just stop trading. Just hang on. You know, somebody made the mistake of trading gold yesterday with 1% risk. So they did 1%. They were subject to a little bit of slippage as well, so they lost a little bit more or around there. Anyway, they didn't do any more trading. So then we traded the Dow, and we made our money back and then some, and they didn't. They said afterwards, "Oh yeah, I took that, lost 1%." It's like, so you know, the mistake is still too much risk in my view. 1% all in one hit is, you've got no wiggle room. All I'm trying to do is, I'd like to risk 1%, no harm in doing that, but how about I just break it down into smaller digestible positions and scale in, dip my toe in the water. When it all starts to play out and it does moves like this, then it's fine. I'm saying to myself, well, I've only risked less than 0.5%, so no issue whatsoever just putting a few more positions up here at a really good entry point. So I had the premium entry somewhere up here around 35, and I still didn't even go over 0.5%, you know, and that's cool. Then obviously with a 0.5% risk, if this dropped in a straight line without too much drama, your 0.5% turns into 2%, 3%. It does work that way, you know. It does move, especially with things like gold, these indices. It happens. It's fine. So just understanding your instruments, understand what you're trading as well, and know the potential. And say, right, well in that case, I only need to risk less, 0.5% or so, and I can easily make 2% on a move. I can bank 1%, taking half off. But we don't look at percentages, because otherwise what you're doing is you're trading your P&L. You don't want to be trading your profit and loss. You don't want to be looking at obsessing over your accounts. The problem with these prop challenges, you're always looking at that. I wonder how many of you have the metrics up, looking at it constantly. Every single trade you take, you scalp it a little bit here and there, and then you're doing refreshing, updating that metrics. Somebody was saying to me the other day, theirs is always on and they obsess over it too much. It's a distraction. It's like, yeah, well, stop looking at it. It's just, so that everything changes because of the environment you're putting yourself under. What you need to do is just forsake all of that, forget it all, and just focus on what you're here to do, and it's not that. Right, so pass a challenge. I mean, you're here to learn to trade, teach a man to fish. Then you can pass challenges in your sleep, quite literally, putting positions on and going to bed, waking up in the morning and, you know, realising profit. So how many people would do that? Would actually leave positions on a prop firm challenge and go to bed? Can you do that? Can you leave them on overnight? You can, can't you? But the point I'm making is that you should be confident in the process. Trust the process that much that it doesn't matter what you're doing. It doesn't matter what you're trading. Just put the positions on. You don't need to be then stalking it necessarily. I'm proactive here because I'm trading a volatile instrument. There's plenty of volume. It's live. I want to be moving the stop loss. I want to be bringing it down to break even. So yeah, it went down, took some off, 30, 40 points maybe, 15, 30 points I guess, collectively. So let's have a look. Moved the stop loss because I thought, well, I've banked some profit. Where are we? Oh, okay, yeah. So that's what we just did. That was quite nice actually. Yeah, so my best fill, so I had a handful at 30, 31 and a couple around 34, 35, and then the initial ones that I put on at 15. So yeah, price dropped quite nicely, and just some scalping, quick scalping at the open with the setup, job done. So this might create lower highs again, and it might just continue to go down. Just want to keep an eye on that. Let's have a look at your questions. What else did you want to look at, guys? So that trade's done. Was in, was out. Shake it all about. It's potentially still valid. Just want to see what the US session brings. Did you want to have a look at? So this might now drop now. It's just because my initial entry might not have been that good that we stopped at break even. What can you do? You could put another one on quickly at say 10, but this time you put your stops at 40, somewhere like that, just to see. But keep an eye on the open. Keep an eye on the US markets, because I know they went down initially. They've just flicked up to retest the highs. they need to fail. But yeah, you could do that. You could go ahead and have another stab at it, couldn't you? I guess that's what some of you do as well, though, isn't it? You get in, rinse and repeat. That's what we were doing yesterday on the Dow. Because it was in a clearly defined downtrend, so it was every time it went up, just short it. So you could do something like that, for example, getting at like, say, I don't know, 10, something like that, and you stop about 40, because what we're saying is, well, that last high, and then just take it down again. Maybe this one looks like it wants to go. It does actually look pretty good now. Never ending buffet. Right, let's get off here. Let's see. Let's get this. Gold is just kind of curling over, a bit jittery. Not a fan of it, the way it's moving at the minute. Quite like the Dow, just to stick with this for a second. Right, retesting 14,100. And we're looking for basically another little nudge down. We could actually measure this. You see, like this move. So we had this here spiked up. Let's put the fibs on. This is nice. Look at that, nice little move. Should have banked a shit ton more. But yeah, get in on this one. Fake move before. Maybe this is the real move. You know, I want to take some more off. Did I put some on? Oh, where's my... Oh, God, I thought I put something on. What? Okay. Oh, yeah, I did put something on. Right, 1488. Come on then, a little bit more. What are we looking at? 85? Back there? Yeah, about there. We'll take some off. Yeah, that'll do. Just a couple extra positions, and they were... Where did we get in on those? I can't even see now. Scalpy day, Friday, scalp day. Because it's the direction, and so we're just going with the whole process. So it was like get in again, because it gave me another opportunity. Measure that pullback. You know, sometimes you appreciate that price goes down, puts in the marker, comes back to a nice clean retracement. Then of course the situation is that right now we're at the US Open, so if it gets a little bit choppy, goes down, goes up again one more time, and then does the drop, that wouldn't surprise you, because it's just volume and it starts to mess about. What you don't want to see is a break of the highs, you know, and when it's putting in lower highs, that's what the trend line's there for, as like a marker. So it has no business getting up here unless it goes to break above. So then putting a stop around there makes sense, because really you don't even want to see it challenge, but it could do. Now that it comes down, it could just be in stages, but what you're looking for then is the next move would be a lower high still. So lower high, and just keep going that way. So it keeps trending down. And then ultimately this just goes bop and pops. And so you're looking for, downside, a break of that initial 382. So marker. So let's have a look at this on here. And bigger picture saying 13,980. 13,980. I don't know why I've stuck with this, but it just seemed really nice in terms of price action, as opposed to a US market, because the Dow is just a mess. I mean, the Dow did a nice flick down at the open. So if we go like that and then drill down to maybe a 4 hour, you can see where we've done a nice little... It just looks very weak. It's like a triple top. But it should, you know, if it is weak, it should just grind down. But we'll find the highest point. We'll do that. We'll measure to see. It should have come back down to at least 38.2 around there. Yeah. There we go. So it did a little flick down. If I show you like on a 5 minute, you can see. You look how choppy it's become though. But in terms of a nice little corrective move, you know, shorting it off the highs, pull back, sell that pullback, depends where you are. Again, you know, every time it's pulling back, just look for the pullbacks. You know, 764 there, give you a nice entry, and that was at 12:35. So that was a few hours ago. Gave you a nice little pullback. So there's your entry. You know, same thing as what I've just done on the DAX. It would be something like that. You know, get in on this move where you think, well, it's triple top, it's coming off those highs, We're curling down, so let's get in. We might get filled here initially. And it might look something like that. But then because I don't put all my risk on the table, 1% or anything to that degree, just put a couple of small positions on, a little bit of risk, just see. Then it pulls back like this. Then I'm like, okay, let's go, you know, let's load up a little bit more. Let's add some proper risk up here. Why? Because it's making a lower high, 764, touches it, taps it, bounced off it. So then we can say, okay, bigger picture. Let's look. T1 is there. So if you were there, you'd have to wait a little while for the US Open, but it pretty much is what you wanted. So pull back, 764. So wave 1 price action, 1, 2, 3. You know, that's what we look for. 1, 2, 3, 1, 2, 3 every time. 1, 2, 3, 1, 2, 3. That's it. Yeah, good. I should have kept something on the DAX, but never mind. Anyone on the DAX? Anyone shorting any indices? They are curling off. They're coming off their highs. They are starting to make their move back down. Anyone on anything? Downside wise. Let's go here. Let's go. Oh, right. Let's go here. Do that. Okay. What's this? Oh, gold. Yeah, gold is just, yeah, pretty sideways, isn't it? Pretty yucky. It's trying to curl down, but it's all kind of choppy, sideways. It's not clean. Nothing's as clean as maybe it could be, but to be fair, we've had a pretty decent week, so just taking it easy now. It was just to look at any setups, any shorted Dow, NAS. Okay. Try, and when you are shorting or when you are in a trade, do try and you're on the US 30. Do try and do the whole 382, 764. Put a T1 and a T2. The emphasis being on T2. T2 is the actual target. You know, to label it T2 is probably a bit misleading. Maybe makes you think too much about T1. Maybe we should just put it. Maybe I should just take it off. But I'm trying to give you an organised way to trade. Structure. But in all fairness, you could. I mean, if you want to help yourself to try and hold, you know, mentally, visually, just remove the T1 and just do this. And just do that as a target. There you go, somewhere like that. 131, 150, for example. Done. But you know where the 382 is, and you know that when price gets there, you want to take some off. You know, you've evolved as a trader. You're leveling up. You don't need to be. It's like riding a bicycle with the stabilizers still on. You don't need those stabilizers anymore. Take them off if you want. Do whatever it takes, because if all you're ever doing is taking little snippets of the price action up here, yet this makes a move down to here, and you don't capture any of that, or you desperately try and chase it on a breakout, and you know, jumping in, jumping out, jumping in, jumping out. That's all very well, but wouldn't it be nice to just have one original position on as well? I mean, I jump in and out. I was doing it yesterday on the Dow at key moments, measuring. I mean, I think somebody was mentioning it's nice to see how price action moves on smaller ranges as well. Yeah, we use the small time frames to look at the small ranges, to look at the more immediate price action to help with entry, don't we? So that would be like that. That's what you want to do. You just want to hold something. Why? Because the Dow's good for it at the least. You know, if it moves 200 points and you're only capturing 20, it's pretty shoddy. It's not really doing it justice. Come on, let's go. Are we going to drop or not? So that needs to come back down anyway and retest there. What we'll do is we'll put, because it's quite slow at the minute, this is the Dow Jones. What we can do is I can go like that, put them on as well, because it looks like it might want to break. Yeah, so might put a couple of little positions on there as well, just to have a little go. And then what we can do as well is, yeah, I'm a bit late to this party, but it's okay. I'm going to put some on. So yeah, put some on That's alright, it's dropping now. Sweet. And then we'll take some off at the 382 again. Where's that? It's about 70, give or take. It's so quick to flick up and down though, isn't it? It don't give me a chance to do nothing. Right, come on, down we get. Oh, I need to break the lower of the last 15. It needs to break the lower of the last 15. So this is the range. Stop loss we could, oh yeah, also once we've seen that Elliott wave price action, look, let's just see again Elliott wave, so it would be like that, 1 to 2 to the 764, so 618 would have been to there. I mean, it hit that easily, such a small range, so yeah, it was just to help with the price action. Now we want to drag our stops down, so I mean I was getting in here anyway, it's quite late, but my stop loss would be measured now based on this current price action. I'm going to take some off here, there we go, so let's take some off at there's that little scalps here as the price comes down to this area around 85. Yeah, I've just taken some off. So then what we do is we measure, this is the range. You can clearly see it tested the 382, and so in terms of stop loss placement, you could be quite strict and say, 45 for example. It's quite huge. Or you can say where prices just come up. Again, you could probably see some sort of on a 1 minute time frame, see some sort of a 764 kickback. So we had the initial opening price, spikes down, faffs about a bit, bottoms out at say 57, retraces up to here. So maybe you could then go like that and just really scrutinize the price action. Oh, there we go, something like that. And so what you're then saying is, you can happily take a couple of losses if it doesn't work out. If price breaks here, then it has you have no business holding. You just allow it. But but you see, like I was doing yesterday, I was jumping in at key levels, getting good entries. I welcomed the pullbacks every time it went up. I was like, yes, this is great. I wasn't sitting there like some people worried that the pullbacks are going to stop them out. No, I was like, come on, let's take some pullback so we can sell it. What's that? 1460. Take some. That? Yeah, about there. Exactly. You can see why. It's a 382. 382 of this range. That's what you want to do. So what I was just saying. If I remove a T1 and T2 and just say, look, the target is 13,150, say 13,140 to 150. So if it can break that 382, which you can clearly see where it is around 370 or so, thereabouts, 31,370, that would be nice. 1460, you're talking about. What are you talking about? You're talking about the DAX, aren't you? Let's have a look at the DAX. Why would you say 40? Oh, 60, yeah, down here, Elliott wave. Well, see, fibs first in terms of this current price action. That would be nice. That would be a nice area. Yeah, it would be a nice area. It would be really nice. But yeah, it's Friday, scalpy day. Took some here, bounced up. Took some on the drop at the open, banked. There was a nice little pullback here, so took some again. A couple of little positions, banked. Done. Let's have a look at gold now, because gold is starting to come alive a little bit. This is cool. Okay, so it went up and tested the previous structure, the previous trend line that was acting as support for so long. Broke support, come up to test the underside of that support, and now we're curling back down, trying to break down. It's a 4-hour chart. Let's go to 1 hour, see what 1 hour's doing. Okay. 49, is that the high? 49.5, I think it is. That's the high. So yeah, that was nice, because it went up. The first marker went up, took out the last high, and it's come off, and that's dropping. So you're looking at 1825 as a target. 1825 is trying to make that move. 1825, that is gold. See if 1825 can get hit. just a bit late to this party. I think maybe you could have used 40 as a benchmark. Why would I say 40? Because it's a round number, but also we'd want to look at this little bit of price action here. You know, I'm always saying put stuff under the microscope, scrutinise it. So, you know, maybe go down to a 5-minute chart and do that, and look at where price is going to break. You can see it's just tearing down quite juicy. 25, about 25. Should we stick a little one on this one? Quite late here, 35, 25. It's about 100 points though. We'll have a little go at 35, 34.2. Yeah, let's stick one on here. Let's work this out. So based on this price action, so I'm short on gold because it's going without us, but it's okay. We're on it now. We'll go like that. We apply that 3 option just in case we find that it bounces. You see it broke here, broke like 39.5, 40 area, so it broke that. Didn't bounce up off the 764, went through it, which is great. So bigger picture, again, just saying, right, you know, we're off. Get a bit of a correction, a bit of a sell-off. And the target is not 25. That's just where you're looking somewhere over here to take some profit. So if we just get you out the thinking of, oh, you know, that's it, this is all we've got to do, just take it down to there and down to the 382 and then stop. But no, it's like, actually no, bigger pictures, 1.5, 801.5. That would give you a good 300 point move down. You think 300 points, can it do it? And it's like, well, of course it can. It's gold. They can all move, and they all, you know, it's moving quite nicely now. We've got the volume. What's your thoughts on people who say going over chart analysis is a waste of time as you're using your time to go over speculative data? Matthew Smith, undercover. Wow, that's very, that's a good title. Well, no, I mean, because we're day trading, we're looking. I need a chart. I need to watch my video 3-step approach. I need to look at the charts to get a nice entry. I want to get a decent entry so that I don't. I need a chart to do that because I need to work out where my stop loss is going to be. I need to work out my risk, and so then work out my lot size. So I need something as a visual, a calculator and a chart, pretty much, and my fibs really as well, because the fibs are just there to give me that nice entry, nice retracements, etc. Looking at, you know, like here where price fails at a key level and then it curls over, you know, breaks this key level for me was important. So somewhere there would have been good for an entry. What did I get in? Got in here. Got in here actually, about 13.7. See, chasing the price down. Come on, just drop. Stop messing about. Gives a nice little dunk and then we're good. But, you know, I'd be happy 28.5. 28.5. So I've just put these fibs on because, again, I need these on to, in case this bounces up, I'd like to know what sort of a pullback we're going to get. Again, we can measure it. The reason fibs work so well is because they are percentages and algorithms and everything else based, you know, maths. It's all maths. Whereas an EMA, another indicator, they're not giving me percentages. They're just giving me, you know, helping, like a trend line, for example. EMA giving me sort of guidance. Are we bullish? Are we bearish? You know, when we're looking at something like the DAX, for example. You know, I know that this having seen and observed as an observer, because that's what we are as traders. I'm an observer. I've been watching. Stop has to be 1843. Why does it have to be 1843? No, it doesn't. No, I just put. Oh, I didn't tell you the stop. Sorry. Yeah, it was up here where you measure it. Get your fibs, put them on wherever your entry is at the time. You know, wherever that was. So if you were getting in like that, based on this, I'm just going to keep dragging the price down. Keep dragging the price, and it's a really crappy entry. So I might just put some. I don't know, might just pull stops to break even. But put some fibs on, apply the 3 option rule. So if you're not sure where to put your stop loss, then you want to do something like that, for example, and then you want to look at where the 764 is, or the 382. Again, fibs, and just measure, because then you're measuring the percentage pullback, the corrective pullback, because things don't move in a straight line, so they go down, they break out, they extend. So like here, 127 extension. So I've just taken some off here. I'm just banking some. It's a little scalp, 20 or so pips. 33 here, because it's extended. Could it bounce up from here? Could do. If it finds a little bit of support, we might get bounce up. But if it breaks on down, then you just hold it, and then you just keep dragging your fibs. Got to use your fibs. The fibs are fine. You can't see my screen. Why not? It's not my fault, is it? Look at my screen. Set up properly. Why can't you see it? You nutter. Right, there's that one. So there's that one coming down. So somewhere like that would be good. Let's get rid of that now. And let's untick that. I can see that the DAX is moving. Is it? Yeah, that's breaking down beautifully. NASI's come off the highs quite nicely as well. Dow Jones, they're all coming off their highs. It's all good. There we go. Next stop, 50%. So down to about 300. That would be cool. 300 would be good. Come on. Down to about 300. A little bit more. Did it hit? Didn't quite hit. Almost. And we'll see what it does when it hits around 05 or so. 31,305, nearly there. Again, I noticed with brokers and TradingView and my charts, we'll go over my charts in a minute because someone did ask. You can see like the price, it does vary a little bit. Weird, really. That'll do. Anyway, that's good. So that's down. So that's 04, 03. What does mine say? I can't keep up here, but it was nice. Good price action. So again, now what we do is we go like this. I'll actually get rid of that. Don't need that one. And just pull that like that. You can see the importance of having a target. Just a T1. It's the Dow Jones. You know, if you exited fully up here somewhere, you're just not doing it justice, and you need to correct that with yourself. You need to get a grip, and you need to do things properly. Forget your target for the day as well. That's trading your P&L. That's just an excuse to cop out to close a position early. If it's in a full-blown move like this, and you're able to make some money now while there's money on the table to be made, why would you finish and cut and run before? So you're trading your profit and loss, and that's where people need to stop. You need to stop pissing around looking at your account every 2 seconds. Oh, I'm up 0.5% down. Just look at the process, look at the trade, T1, T2. Take some off, don't close it all down. Don't say to yourself, convinced, I've done my profit quote for the day. That's not, what's your quota? What, making what, 0.5% a day and losing 2 on a bad day? You know, that's not how we trade. Let your profits run, simple. Let them run. This is going to go down to 150, and take some off at the 50% if you're not sure. Take some off at the 618. Don't close it all down though. It's a big mistake. That's what people are doing. It's your biggest mistake. It's one of your biggest mistakes. There's money on the table when you're closing. It doesn't matter what it was. There's nothing that's not finished their move. Look. That's nice. Take some off there. Did you take some off the DAX? Acclaim, did you take some off? Just use the fibs is what I'm saying. Use the fibs. You know what I'm talking about. People start questioning me. Don't question me like that, because you're making an excuse for yourself. You get out your own way. Get out your own way. You know what you got to do. You know what your job is. Yet for some reason you come in and you forget what the job is, or you haven't quite trained yourself up, or haven't helped you properly. I'm failing you in some respect to teach you properly how and what you should do. what you should do is hold. Something's moving like that, hold. Pay yourself, take some money off the table, but hold. It's not rocket science. Just keep some skin in the game. Even if it's a small position, keep something on. Train yourself to keep a position on. Stop snatching profits and running away like a little puppy. You know, do the job properly or don't do it at all. You know, being told or being shown over and over and over and over and over and over and over. I'm bored of it. I get sick of showing you the same thing. You're not doing it. How many times do I need to show you before you start doing it? So fix it. Work on the 80-20 principle. Fix what you need to fix. Spend 80% fixing. It's like a car that needs a service. You open up the bonnet, you look at the engine, it needs sorting out. Sort it before you go driving off in it. Yet you want to take it and drive off 100 miles down the motorway. Your engine's going to conk out, your brakes don't work properly. You know, you're not ready. So get yourself ready. You guys keep taking on these prop firms funded. You're not ready as a trader to manage or handle those funds. It's only a question of time. It's a ticking bomb. It's a question of time before you go and lose them. Because you're refusing to do the work. Writing stuff down and spending hours watching videos, that's not the work. I mean the work under the bonnet, in your head. This is what it should look like for gold, for example. Let's adjust this. You know, it's about 45, I think somebody said. For argument's sake, that's it. This is the range. This is what you're looking for. As I move down, it's working, it's going. You know, I'm a bit late getting in. Who cares? It's going to where I need it to go. Another 60, 70 pips can do that. Where are you? Oh, I'm just sitting on the sidelines. I snatched profit and I'm done for the day. How can you be done for the day? You're in a trade. The trade's not over. That's my argument. The position, the trade, that this is the setup. This is a setup. If this gets down to there, but you've taken profit up here after 2 minutes and you've not left anything in the game, you failed. Because that's going to come back to bite you in the long term. It's going to come back to bite you in the arse. It just will. When you have a loss, you lost. You can't say, oh yeah, I'm done for the day with the little loss. You know, the loss will turn into a loss. There's no two ways about it, you know. So if you're not letting the profits run, or you're not allowing to make some money, allowing yourself, just get out your own way and stop questioning everything. T1, T2, even take off the T1 to help you. That's what it should look like on a chart. Gold, that's what it should look like. If you're going short and you're trying to go short on this, you're not looking for it to go short for 2 seconds and 2 minutes and then be finished. No, you're looking for it to get to these targets. And that's because we've done all the work to suggest that it's got a probability, a high probability of actually getting down to these targets. Maybe, maybe not. I don't know, we'll see what happens. Anyway, so where are we at now? So we've broken, anyway, let's get back to, let's have a look at some of these others. Let's go to the NAS quickly. NAS has been nice. American markets in free fall, so drill down, beautiful sell-off. Did that there, go like that there. Oh, let's go here, put that on. Why is it not doing it? Come here, let's get on there. Just keep working on yourselves, guys. Stop putting so much attention on these accounts. You're going to lose them all. At some point, you're going to lose them. At the moment, realistically, based on how you're trading, based on your current track record, based on your history, based on everything that you've done up to this point, what I've shown you and the way to do it, obviously my way is just one example, one option, one way of trading. But if you're following my way, show me the respect by actually following it the way that I've shown you. If you're not doing it the way that I've shown you and you still insist on doing it your way, you're failing. You know, fundamentally, you're failing yourself. Yeah, it's because you're not. It's not nice. You're not. You know, if you were a third person looking at you, you'd just be disappointed almost. Stop snatching profits after 2 seconds because it moved a bit. Take some off, yeah, but don't close the whole bloody thing. Leave something on. Just leave something on. Leave anything on. And then slowly work on that process of leaving a bit more and a little bit more on. So for me, I want to take half off. That's fine. I'll take 50% off around T1, like this move here on the NAS. down to the 382. So it went to the 50. I don't care it went to the 50. It went to the 30 first, 38.2. So it's done the best part of a 40% correction. 40% correction, I'll bank some. Goes up, faffs around, fine. He wants to carry on going, 50%. I might take a little bit off here as well. You know, maybe even a smaller bit of the other bit, whatever's left. Just that's why scaling with multiple positions. I don't restrict myself with just strictly 2 positions. Initially, I'm showing you 2 positions to encourage you to open more than one. That's what I've done there. I've just tried to stretch your thinking a little bit. So open up 2, but really open up 5 or 6, like we did yesterday on the Dow. You know, that must have felt quite nice. You got 5, 6 positions running. Then you take maybe, I don't know, say you got 6 open, take 3 off here, leave 3 as a runner, maybe take 1 off here at the 50, you got 2 left, maybe take 1 off here, take 1 off here. Why? Because we're working it out that we're looking for the bigger picture, 76.4%. Where's 76.4? Well, that's still 20 odd percent less than a full retracement. So in my view, and in my mind, and the way I've tricked myself into my thinking almost, is that I am taking profit early anyway. I am snatching profit. By taking it off at the 764, I'm snatching profit because that's not a full-blown move. And what about the extensions? What about when it breaks out and makes a new low, like it can do today? And we can see a continuation to the downside, more of a sell-off. You know, what if it does that? Then, you know, that 76.4 will be dwarfed in terms of looking back thinking, oh, what a little target that was. You know, but yeah, still issues here with people that have got scalpy kind of mentalities, all very knee-jerk. And you see how hard it was yesterday. Well, it wasn't hard for me. It wasn't hard, but people still made mistakes. Timing was all over the shop. Closing positions down because you've set all your targets. You've set all your targets at the same level, but you had targets. You had open positions that were lower. So if you closed them, they were closing for a loss. Somebody did that. He set them all to close in the same place. Where's the mindset in that? Why would you close a position for a loss in a downtrend? Why would you do that? Someone else, no risk management at all, just hammering the account, all really excitable, like little puppies. Just like, look, and then the account, then it flicks up against them a little bit, and they got smacked out. Somebody did that on gold the other day. You know, high risk, going long at 18.18. It wasn't a long at the 382. It was a short off resistance. It curled over. What did they do? They just sat there and watched it all unravel. They didn't close. They didn't cut their losses. Anything. They were still kind of hopeful. You know, because there was no. I don't know. Just looking at a 382. You want to see the 382 break. If it doesn't break, you get out of the way. That's what they should have done, but they didn't. They just sat there and went, But that's just lacking in experience. It's fine. But the problem we're seeing in most cases is that people are really struggling to leave positions to run. If you pay yourself and you move your stops to break even, you have no excuse but to leave a position on. If you continue to close positions all down, you're not holding anything, that's where you need to start working on it. And I keep saying the same thing over and over, and I'm still not seeing people change their ways. And they may make up whatever excuse they want, but it's getting a bit jarring now because it's the same stuff. It's like, I can't change it for you. You just got to do it. Just leave something on. So start with leaving one runner on at the very least, or a couple of smaller ones. Skin in the game, guys. Skin in the game. It's not a spectator sport. I don't want to hear people say to me, oh, I'm done for the day, or I've hit my target. Done for the day. When this is done to here, when it gets down to 150, so we've got another 150 points. If it gets down there, if it can do it, then you're done. That's when you're done. That's how you should. Don't jump in now at 300. That's just stupid. Don't chase it down. But the point is that you've got to start doing it like that. That's your target. Get your trading view charts up and stop putting your targets like this. I keep seeing people on a 15-minute chart and doing that. It's annoying. That's not the target. Quick 382 scalp. I don't give a shit about your 382 scalps. I want to see that. I want to see you doing it properly. Markets can move because they're being moved by big institutions with a lot of money. You taking little 20 points here and there, that's, it's okay, but you are missing out. Missing out big time. Come on then, next stop. Here we go, a bit more. So let's get down to like 30. Let's just have a check that. Yeah, about 30. 31,230 next target on the Dow. 31,230. I'm out of gold, by the way. Sorry to say, out of gold. Gold's been a bit boring last few days, I've got to say. I tried to do something with it yesterday. Didn't want to. It's been in a bit of an uptrend, a bit of a correction, so we'll allow it to go up and correct. As far as I'm concerned, it's got to do whatever it's got to do. It's been in a heavily weighted downtrend for quite a while now, quite a few months. So the fact that it's trying to go up, let it go up, it's quite nice to see. Going a bit more. Let's go to a 5 minute on the Dow. And we'll take some off at the 618. Got another account here. Come on, a bit more. Where are we going? 30. The DAX. The DAX is moving nicely. The DAX was a nice setup. 764 strategy. 13,980. 764 strategy. If you traded the DAX but you're in and you're out fully, again you've failed. You haven't even done the 764 strategy justice. 43. I'm going to take some off at 43 or so. About 45. Yeah, there you go. It's flicking around. It's hard to get the exact unless you put a limit on there. But that's okay. That's the Dow, just looking for the next fib. Again, you know, trade to the fibs, trade to the lines. They're percentages at the end of the day. Algorithms, simple math. It's all integrated. It's all there. So with things moving certain percentages, you know, when you look at something that's up or down on the day, you know, it's trailing 1% up on the day or down 1% on the day. You know, it's giving you that information. It's telling you, you know, Wall Street's down 0.4% on the day so far, based on my information. German DAX is actually up 0.9, sorry, it's nearly up 1% on the day. And that's understandable because it was in a bullish uptrend. You know, just take note of that data. The American markets are the best at the moment. It's just quite weighted to the downside, quite bearish. Again, we had this on Wednesday. Grinds up, grinds up, grinds up. Lovely move down. Yet you're still snatching 15 points or 10 points or whatever up here somewhere. And what about all of this? You know, have you got some skin in the game? You let something wrong. So as from next week, all of you have been shown, those of you that have worked with me, yeah, looking for the next furlong. Yeah, exactly. Use real life examples if that's what you need. I always do the journey like we're going for a long drive. And so we're on the motorway, the highway, and these are the pit stops. You want to stop for a toilet break? You want to stop for a cup of coffee, some lunch? You stop when we get to the service station. You don't stop on the lay-by on the motorway, do you? Because you just feel like it. Because I'm bursting for a wee, so I'm going to go in the bushes. Don't go in the bushes, because Benno's hiding in there. You know, you just try and provide... It's just about structure. So I put some lines on the chart. Really, really simple stuff. Trade to the lines. Bit like sports, football. They play within the lines. Just, you know, just try and apply some of that. Listen to what I'm actually saying and do it. We've talked about it for months and months and months. People keep blowing accounts, losing money, and then you know, so well, you're not doing it. At the end of the day, you're not doing it exactly as it's supposed to be done. You're not doing it my way. You're kind of doing it my way, sort of, kind of. You know, people then come to me and they go, "Oh yeah, I've been doing it your way. I'm still losing." So, well, you're not doing it my way, though, are you? Really? So just, you know, bear in mind how you're performing. You know, if you're still snatching profits, scalping bits and pieces here and there, that's fine. But if you're leaving nothing on the table, like this is the US Open, we're getting some nice movement, clear downtrend. T1 takes them off down here, fine. Let it run to the 50, let it run to the 618. You know, takes them off, done. That's it. I don't want to say any more on it. I won't say any more on it. It's just the same stuff. Otherwise, it's a bit boring. It's like a record player. Just when all is said and done, you know what to do, and if you're not doing it, start doing it. When are you going to make that change? Ah, brilliant. Ah, fantastic. Just got a bit of news. Alright, just answering an email. Yeah, look, guys, if you need help with what we've just been talking about, you know, if you're not holding positions, focus on that. Get that part of your trading right. Hold something. Keep some skin in the game. You don't have to take all the profit off. Just start doing it. Start practicing. Hold something. Certainly don't close things for losses either. Or because, you know, say you entered, like yesterday on the Dow, you know, somebody did something where, you know, they entered here, for example, and then it went up. And so then I think it was like 31 180, I think the target was. And yeah, so they set them all to close. So one of their positions, they only had 3 positions on, but one of them got closed for a loss, which I just thought was balmy. That doesn't make any sense. So just little things, you know, there's little things like that. If you're still making mistakes which are still not quite right, you know, somebody else went too heavy, too hard, they got blown out of the water. They decided to do another prop challenge straight away. They're on tilt, they're emotional, frustrated. You know, it's never gonna end well. But it's funny, isn't it? It's almost like you're having an outer body experience. It's like, this is not me. This is someone else. Someone's taken over my body. I'm possessed. It's part of the process. You know, you need to do these things. You need to experience it. But it's like, what you need to sort of say to yourself is, how many times are you willing to do this? How many times are you willing to go into the boxing ring and get beaten up by Mike Tyson before you just say, before your coach just says, stay down, don't get up, just stay down. This is too painful to watch. You're going to torture yourself. I've made such sacrifices over the years. I've put myself through hell and back to get to where I need to be mentally, and it's not easy. You know, it's taken me years and years and years and years. And you know, speaking to people, sometimes they say, "Could it? You know, maybe why is it taking you so long? Could it have been done a little bit quicker?" Dear. Someone, no, that was a process, unfortunately. But don't worry about it. I'm here. I've been through what you've been through. I've lost a ton of money over the years. Yeah, you know, it just happens. Yeah. Okay. So good to know. Someone's just saying, just don't want to get their heads around the strategies. So let's start with the 764. Let's just do the 764 3-step approach as well. Three-step approach video for entry. So understand 764 strategy and the divergent strategy. They're both designed for what? For you know, for getting a perfect entry. Come on, here we go. A bit more. Oh, no, I didn't mean to do that. That's too near. Just moving the stop loss on the Dow. Timber. So let's have a look at the, while we're waiting for this. What have we got? 30. So that should get the 30 as the next target anyway. Come on, down to 30. With the spreads, yeah, 30 is good. 230 on the Dow, next target, and then 150 or thereabouts. But yeah, let's have a look at like 764. This is 764. This is what the DAX had been doing all day. It's just consolidated all day at that key level. Let's clear this up a little bit. That's what it looks like. Quite simply, What's T1 for the 764 strategy? If you know that, you know what T2 is. If you know what T1, T2 is, you're halfway there. That's it. There's nothing else to know in terms of this strategy. All we're doing is we're looking at, in this case, primary confluence is the fib, so 764 area, brilliant, stuttered and stalled. We've got a lovely head and shoulders formation, left shoulder, right shoulder forming. Beautiful. Looking at least a 382 correction. Why? Because, you know, that's generally what I see often plays out. The reason I don't use pivots and EMAs and trend lines to try and gauge price action is because I don't have set targets. You know, like we see reactions off other support and resistance, but it feels too much like a guess job when we're trying to work out targets. By using fibs, I just know 382, 764. They work. Like here, you know, look at this on the DAX, okay? So 1 hour chart, so we went up, this is 10 o'clock, so finished mid-morning, then 11, consolidate, 12, consolidate, 2 hours, then 1 o'clock started coming off. I see that, I'm thinking, you know what, I want to be involved in this. I see that, I thought, oh good, we'll be doing a live session soon, so I'm going to get involved in this, probably with everyone, and just start calling it. So 764, back to a 382 correction. So target is 13,980. So you want to snatch some profit beforehand? Well, you can do that by applying the 3-step approach. So you're looking at price action. There's so many elements to what I'm doing. So we have that impulsive move down, followed by the retracement. Let's clear this up. Let's say first move, Elliott wave pull back to a 764 or thereabouts. That's cool. So I took one at 35. I took a couple around 30, 35 on this pullback here. That will do. You know, it opened, it went down like this, impulsive move. Because it was impulsive, I just snatched a little bit off there. Then it went up, stopped me out. But then I got in again and had another little go. And just hold something for down to 1400. Another 40 odd points, 50 points. Take some along the way. Great, we could see higher lows. You never know. It could. The thing about taking some profit off the table, the only reason I would do that is because sometimes you see like price doesn't go straight away in the direction. Things don't generally move in a straight line. So when they don't move in a straight line and they go against me, I want to manage my stop loss. I want to make sure I've taken some money off the table. Because otherwise all I'm going to be doing is a lot of the time it's just going to keep going up. Stop loss, stop loss, stop loss. But like break even, break even, break even. And always holding on and hoping that we're going to just do a big sell-off and like a T2 type move. Of course, the journey from here to here is going to take some time. It might take all day now for it to get down there. So I want to pay myself. You know, I do want to get paid along the way. Because then I just move my stop loss. And every so often, periodically, trail my stop loss. So like here, the stop loss is down to here now, around 40. 114, 140. Why? Because we've allowed the pullback. Job done. Now it's done a nice extended move. Brilliant. Is it going to keep going? Yeah, it's going. It's good. So just watch every time it gets to these little fibs here. These are secondary fibs. These are primary fibs. So label each part of the range up. Be clear on what it is. What do I mean by secondary? Well, we could again tap out here, hit the 618 around 35, and it could go all the way back up. So you make sure you've taken some profit at some stage. If it doesn't go all the way back up and it keeps going down, you want to make sure you're still in this. But if it does react and go up, all you want to do really is, worst case, maybe get in again. Repeat the entry, rinse and repeat, rinse and repeat, rinse and repeat, and do like I showed you yesterday when we traded the Dow. It was rinse and repeat. I did it for like 2, 3, 4 hours. Just, it was never a doubt in my mind that was going to make some money. It was just a case of how much. And I took a loss on gold, which was just a lazy loss. It felt like really cheap giving it away. And what? That didn't faze me. It was like 0.25% risk loss. Nothing. All right, we should be all out of this. What's this? 230. 230. What's going on here? 230. Did it hit? I'm looking at the wrong thing, that's why. Sorry guys, I'm looking at the wrong chart. Did it hit? One of my positions just got closed out. There, so 618. You're not in this. Anyone still not in these short positions, not holding? There you go. Go back to to getting it on. Just to have 40 winning days in a row, then we are there. That's yeah. I mean, that's a bit hard on yourself. Why don't you just think there's 20 working days in a month? Let's just focus on week by week. Let's have a positive week. You can have losses in a week, but have a positive week. Get through a whole week and make money. Do it again the next week. See if you can get a whole month where you've just made money. Rinse and repeat, rinse and repeat. Right, 618. Now, 618 on there. Where's the German DAX? Is that a 618? Yeah, sort of at 618. Where are we at? Still got a little bit to go. Nice little down moves. Why would you panic? Why would you close out? The only reason I get out of a trade is if I get stopped out after trading my stop or poor entry. But there's nothing to stop me getting in again. I'm not going to get hung up on it. So where are we at? There, that's that there. That's cool. Let's have a little read. Then another 5 miles. Service in about 2 miles. Then another 5 miles. How much do you typically take off? Say from a position with a TP, and it reaches 618. Yeah, so that's why I scale in with lots of little positions. Or if I have 2 positions, strictly speaking, add another one like we did here. Add another one. Add another one. Add another one. It's just rinse and repeat, rinse and repeat. Then maybe take that one position off, but always keep whatever happens. Keep a runner on. Yeah, how you do that is up to you. What I'd say is the first thing that some people need to snap out of is just opening one position. They just put one standard lot on, for example. You've all done it at some point, just one lot. So what's that in keeping in? What sort of risk is that? Not really. There was no thought. There was no calculation at all. It was just one lot, one position, one lot. So okay. So then what? It moves a little bit, 20, 30 pips. You bank and it's done. That's your trade. And if you've got the discipline to say that was my only trade, I did one lot. It moved 20, 30 pips. I made $200, $300, euro, whatever, and I'm done. Fantastic. But I just know from experience that most of you don't trade that way. Stop kidding yourselves. It's so funny. It's like someone just says, "Oh yeah, I'm done for the day." 4 hours later, they're still there. They haven't really gone anywhere. They might have gotten up to have a bite to eat or grab a drink, but they're back at their charts. They're back looking at everything. It's so funny. It's like, stop kidding yourself. You're just kidding yourself. Like if I said to you, Alfred, open up 6 positions, or think about 382, 50, 618. There's 4 fibs within this entire move. 4 fibs. So you want to take some off there, some off there, some off there. This is beautiful. It's going where we need it to go. Timber. Come on. Bit more. So maybe at 05 this will get stuck. Maybe we'll have a little bounce, making the whole higher low kind of idea, and then you need it to break that 764 to start really changing structure. And you want 230 to break on the Dow because that's a 618. Let's just leave that like that. See what I'm doing here as well. Just every time it goes through these fibs, they're done. So at some point you could have maybe taken a little bit off during this little rundown at some point somewhere if you felt the need to just scalp it. But what I need to say to you is, or what you need to say to yourself is the same thing I've just said for the last half an hour. Make sure that if you are going to justify banking a little bit early, you're not closing everything down. So if you work out your risk based on your stop loss and you're trading with one lot, break your one lot down into maybe 5 positions, 0.2, 0.2. Maybe do that. Maybe 0.2, 0.2, 0.3, 0.3. Maybe take 2 of those positions off along the way, but keep 2 original runners on. One for a property, one for property 2. Whatever works with yourself. Bearing in mind, there's your T1, there's your T2. What an achievement it would be for you to have kept something on for the whole hog, for the whole journey down. If you get stopped out because you've managed your stop loss, you've trailed your stop loss, okay, fair enough. But you know, we try and do that, and yeah, considering the difference between taking partial profits on two positions, T1, T2, versus opening a lot of small positions and doing what you were saying. So like two positions is if you can handle it. Two positions is like saying, right, not going to take anything off until you get to here and then here. But two positions risking 0.5%, then as it broke down here on the retest, could take a third position and so risk another 0.25%, so 0.25, so you've got 0.75 risk on the table, 3 open trades. It gets down to like here, that extra one you've opened, you could close that, so you've paid yourself. So that way you're not interrupting or interfering with the original trade, the original two positions that you put on, because they've got a job to do. One's to get to here, one's to get to here. You need to get out the way of that and stop interfering, and stop getting in your own way, and stop pissing around with the trade. So if you want to have a little piss around, you open up an extra position, couple of positions. Open up a few smaller ones and toy with them. I like having that flexibility. I was just trying to get people to think like that, whereas rather than just open one position, which kind of restricts you, you can take partials on that open position just before you click close. Just go to the number, change one lot to, I don't know, 0.5, and then click close, and it will just close half of your position. But what I'm saying is, you do it that way, the temptation's there. You're looking at all this profit. You can see one lot trade, you know, it's moved 30 pips, 30 points. You've got $300 showing. You look at it, $300. What could I do with $300? Oh, sorry, I was just going to close it all. That's what you do. and that's just something you need to work on. But start working on it. You're not working. If you haven't changed that yet, and you haven't changed in like 6 months, 3 months, we keep talking about it, you need to start changing. You need to start making that change. You just need to do it. If it wasn't there, you missed out. Yeah. Yeah. Come on, let's go. Let's go. So this is nice. Let's see if it can break a little bit more. One more little tick. You see my targets as well. I always round up. So my target here is 13,980, 85. I think, you know, we've got 78.9, so 79. There's a 382. Again, it varies from broker to broker, chart to chart. That does change slightly. So round it up so you make sure you get some profit off the table. Yeah. Cash out the 764 down here. That's taking profit early. Right, good. Hopefully you found this very informative. I am done, really. It's not bad. What have we done? We've done an hour 45 minutes worth. Yeah, watch over it. It's just going over the same stuff. We had a couple of nice little setups. The Dow went, DAX went, gold went, sort of. They made some little moves. It's all good. Daily on the DAX is still bullish. So again, the reason we put the fibs on this inner part of this secondary confluence, secondary range, if you like, secondary fibs, because we're basically saying, well, put a trend line on here. Daily says that we're bullish. So it might at some point find some support and then bounce back up. It broke through there, broke through the trend line based on those points. What about here? If we do that. Okay, that's interesting. We could just do that, for example. Again, it's just for reference, because we're saying if it can break through here, break through this bit of support, then what we're seeing is a change in sentiment, a change in structure. You know, where we've had the nice move up, good pump up to the 764. And it's come off that 764 beautifully. So the 764 strategy and a divergent strategy are there to give you the pinpoint entry. So that way you're not over trading. You don't just jump in willy-nilly. You know, this is where you want it to be shorting on the DAX. This was the time to be shorting on the DAX. Why? Because that's a 764 strategy. That's a strategy. It complies. It meets our criteria. So thereby you're not just trading, like here for example, you wouldn't just be trying to short here on the DAX. A lot of people just don't have the patience. You have the strategies, so use the strategies. They're your guide. They're going to tell you when to get in And yeah, and then we drill down to these small time frames, like 5 minutes, and we see price consolidating beautifully like this. So for us, putting a stop loss at around 14,160 was a no-brainer. Then it falls over, you drag your stop loss. This is it. This is all you need to be doing, managing your stop loss, manage your risk. So then, like now, where it's broken down beautifully, move your stop loss to break even. It's moved 100 points since we started talking about shorting this. How much of that did you grab? 20 points? Dead. 20 points. Oh dear. It's not worth it. Stop doing it to yourself. Right, good. Done. So let's next week we'll go over it all again. Repeat until it all starts to stick. Eventually it will stick. Eventually you'll make some changes. Whether it happens in 6 months, 6 days, 6 weeks, 6 minutes, happens from Monday. That's down to you. Just think about what we're doing here. Think about what we've said. You've got a process. You've got strategies. You've got the rules. Print out the rules, tick them off as you go. Rule 1, okay, rule 1, yeah, done, okay, done. Rule 2, done. That's it. 6 rules. Are you following all 6? Are you following 5 of them? You're following only 2 of them? Come on! Come on, a bit more German DAX. Bit more. I'm just going to stick around for a little bit. Oh, where's my thing gone? Great. I'm just sticking around because until we get to our targets. All right. So now 14.10. 14.10. Kind of a bit more. About there. Okay, about there. I'll take some off on the DAX here because we're at the level. How about the Wall Street as well? What's Wall Street doing? Wall Street. Come on, Wall Street. Let's go. 150. Let's go. Let's do it. Right, I want to drag the stop loss on this. Let's drag the stop loss. Where are we going with the stop loss? So we've got to work it out. Let's go to like 5 minute or 15 minute, whatever works. I want to measure this current move. Anticipation of any pullback up because we are overextended beautifully at the 618. It might do a little nasty, cheeky little flick up. So I need to work out where 382 is, for example. If I want to be aggressive, maybe move my stops down to 350. 350. There you go. Done on there. And, how many of you are spectators right now? Because you cashed out early? Because you hit your target or other bullshit? I am hard, and I'll have a go because it's time. You want to make this work. You want me to be all softly, nicey. Forget that. I need to get you sorted. You need to get shipshape. You're not fit to play this game otherwise. You're on my shift as well, and if you're not doing the things the way it's supposed to be done, and I'm sat here and I'm watching you fail, it annoys me. I'm thinking, what more do I do to get you to where you need to be? What can I do? What else can I do? I can't. And it's so frustrating for me. I know how frustrated you must feel. And that's the game, isn't it? Kind of a bit more, and then we're done. A bit more. It might bounce off 200. Let's see if the DAX is going to hit my target. Yeah, we're nearly there on the DAX. I did take some off the DAX anyway, around 14. So I've only got them running. What's the NAS doing? NAS is stalling but retesting the 50. Can we break down a bit more? Maybe. Gold's dead. Don't like gold at all. Not even going to look at gold. The markets are where it's at. Gold is, it's just, there's a problem with gold. It's not like the DAX. There's one fundamental difference with this setup. Okay, and so people have sent me these messages about what's gold doing. How about gold? I like gold. Gold's coming off. Yeah. Okay, cool. Let's see. Did it, off this last high, did it stall at the 764? Kind of. Around 41.8. That was my target from the other day. And it went up and it went through there. So I was interested in entertaining it. But then it sort of stalled and stuttered a little bit. So is that... Yeah, I mean, if we think about it, say even if you were in at like 42, it's God, we're nearly there. Nearly there on Dow. Come on, Dow, a bit more, and then we're done. And yeah, I mean, look, we could have maybe said, yeah, have a go yesterday. Didn't work. Then went up, took out the highs. Just that price action alone is okay. To get in again at 40 would have been the play, because the 764 also based on the pullback and the break of the 764 of this little range. You know, little telltale signs for entry. Great, but now it's come back up pretty much to my entry, so I wouldn't be in it. Well, I'm not in it, so you know, it's not. I don't know, it's not the best. It might still drop. I'll keep it on, and I'll keep this up, and we'll keep an eye on it. But if it breaks the structure, so again, drill down to something like, okay, a bit more on the, little bit more, 60, 59, 58 for 765. Where are we? 66, 60. Right. Okay, I'm taking some off here on the Dow. I'm all done. All done on the Dow. Done. All finished. All done. Okay. Let me just put this on. Yeah, I'm going to cash that a little bit early, maybe 10 pips or so. There you go. It's just there. It's done. So this is what we do. 3-option rule. Why is that so important? It's about measuring each range every time a move has happened, because you know markets are going to flick back against you, and if they flick back against you, you want to know where it's going to flick back to. So then you can then work out where to manage your stop loss, bring it down. Lock, you know, like here, if you were shorting, you want to be, like I said, 45 still an area of interest. Has no business breaking above 1845 on gold. So now that's in as a marker. You can see that we've come up to about 38.2. Is it turning? It looks like it's trying to turn from here. So then you could drag your stop loss down, allow it to breathe, do whatever it needs to do. Then you could maybe go like this. You know, you could then like go, okay, get in again if you got stopped out at break even, have another little stab at it, and go there, and then just let this play out to where we said, which is 764 of the complete range. Will it get down there? Might do. Might get down there tomorrow, or sorry, into Monday. But this could be the start of the move down. You know, especially on this pullback, if it fails and curls back over, then again you just pull your stop loss once more and drag that down to break even. So just it's not rocket science. There's nothing complicated about it. It's just use the fibs to guide you for entry, exit, managing the stop loss, taking profit, all of it. If you're taking profit before these levels are hit, a few pips like I just did, fine, no problem. Took some profit off early, probably about 60 area just then, so somewhere like there, you know, it's flicking down, something like that, you know, took some off, done. That's the move. How many of you are in this move down? How many of you held anything on either that or the NAS or the DAX? How many of you jumped in and out several times? In again, out again, in again, oh, it's still going, okay, in again, out again, quite erratic, but all the while you still didn't leave the original trades on. So these are the considerations. That's where you need to get to work. Get to work on that. And don't, yeah, Travis, I think, yeah, that's it. You got some ideas, that's it. Yeah. You don't need to worry about all that too much. Get confused, yeah, because you're putting yourself to like 5 points, you know, bullet point in it. You don't need to function that way. You know exactly what we're doing and how, you know exactly how we're trading. You just have to put it on at the right time. You can see where the mistakes were. Risking too much, not going in at key levels. There was no strategy, just in and out, in and out, in and out, doing too much. And of course, shit's going to go wrong because it's not conforming to any rules. The rules are written. The rules are there on the website. If you go on the website and go under the strategies page on the website, the rules are there. They're your bullet points. Don't draw up your own bullet points. Stick to those bullet points. Print off those bullet points from the strategy, the rules. And if you need to take each bullet point and dissect it and break it down into a little bit more detail, do that. But they're the rules. You know, don't write another set of half a dozen rules for yourself. They're done. It's already done for you. You know, keep it simple. And then, yeah, work with that as your template and then tweak it. Just so then all you're doing is trying to learn it off by heart. So once you learn it off by heart, that's fine. That's still not that doesn't mean you're done. You know, learning something off by heart is great, but if you're not able to stick to it and still making the same mistakes, then that's where we need to fix it. But that's okay. We can. That's the whole point. It's all good. So, yeah. nice movement, really nice day to come in. I had a feeling the other day when I was talking about doing a live, I thought we'll do a live on Friday. I think it'll be better than last Friday. Last Friday was dead. But this Friday, I thought, yeah, we've got some good movement, good sell-offs, good price action. And the fact that it all tried to consolidate and go up yesterday, I thought, okay, if it doesn't go up tomorrow, if it doesn't break long, we're just going to keep holding to the downside. We're going to look for shorts today and just go again one more time. Beautiful movement. And see, look, now I can sit here and I can get a little bit feeling of FOMO because I'm thinking, I've cashed out too early. I've taken some off too soon. I took my profit off on the Dow here. And yet it's moving past my target. It's going to maybe put in a full extension. So what do? This is what some of you do, a lot of you do. You're jumping in again now, chasing it down to 31,100 or something like that. Jumped in here late and chase it. Again, if you're looking at like momentum, like 15-minute momentum's quite good. If you're looking at maybe the hourly and it's curling over and it breaks the 382 and it starts going like this, then maybe you could jump in again and put a little risk on and then measure the pullbacks and say, right, if it pulls back 38.2, add another one. This is when you become a little bit more proficient with your trading. You can make those tweaks. It's See, getting in and out a few times along the way whilst keeping two main positions open, that's very good. You're banking profit along the way, which is keeping you busy and distracted from the original trades, the original positions, which you then don't touch. And then when it moves beautifully like this, what's that? It's only like, I don't know. I mean, I said to you, look, breaking 300 at 50%, another 150 points, that alone. So, 200, if you got a 200 plus move out of that and you made some money, 200 plus move, great. If on a 200 plus move, what's actually looking at the highs, nearly 600 down to 100, it's 500 points. So it's moved 500 points. How many points have you made? If you've made less than 250 points, you failed. Why? Because again, use that as a benchmark, saying, right, if something potentially you knew where it was going to go. So someone was talking about earlier, where's that question earlier from Matthew Smith, undercover. Yeah, you're talking about people who say over. I don't know anyone who says that. I don't really know anybody who. Yeah, don't know. But I know what you're saying. But basically, I need a chart up to see where the targets are. So take some profit along the way. Hold some at 764. Start doing that. Did you make? If something moves 1,000 points and you only make 100 points out of it. Okay, 100 points sounds kind of cool, but still, 100 points out of 500 points, you're failing. To cut a position early and say, oh, I'm done for the day. There's just something wrong there. It's like you just can't wait to get out of something. You're not enjoying your trading. Can't wait to get out of the trade. Can't wait to finish. Can't wait to get away from that trade because it just felt like it was putting you under pressure. You felt anxious. You felt sweaty palms. It's like almost like you have a reluctance to trade, or you don't want to put yourself under that emotional strain that you feel where each time you trade. And so that's where you need to work on it. 80-20 principle. 80% of your time needs to be taken. Work on yourself. What's going on? All the podcasts and all the meditating, if it's still not working, it's because you haven't made that change. It's something that you have to do something. It's a call to action, isn't it? You need to press the action button. You need to do something. There's queues of people that procrastinate. The politicians, they sit and they just talk, making lots of noises. Don't really get much done. Then there's a queue for the doers. There's no queue. There's no queue. They're off doing it. So you got to do it. Just do it. Just like Nike. Just do it. T1, T2. Just put 2 positions on and then faff around all you want with the extra positions, scalp to your heart's content, whatever. You know, whatever works. But make sure the fundamental is that you've got 2 positions on. Everyone should have had a target down to here as a 764 on Wall Street, on the Dow. Same with the NAS. Perfect. Bang on the money. What's German doing? German's lagging a little bit, but T1's done. That's okay. That was alright. Nice 764. It's done. 764, T1, 382. That is enough. Perfect. You know, don't need to do anything else. Manage your stop loss, put it to break even, whatever you want to do. It's done. You know, done. Didn't hold anything to these targets. Get to it. That's it. 2 hours of saying the same thing over and over. Now, if on Monday you guys show me 50, you better just keep it to yourself. Don't send me 15-minute screenshots saying, oh, look, a quick scalp, I snatched it at 382 and all. I'm not interested. Show me, if you don't show me when something, and that's my trade as well, if I'm trading it, and I give you the targets here, for example, and if the target's here, but yet you've fully closed out somewhere up here, don't talk to me anymore. Just don't ask me for my help. You're wasting my time, you're wasting your own time. If you're trading with me, you need to do it my way. Yeah, that's narcissistic, psychopathic, whatever you want to call it. But I can only use my energy to show you and help you with something I can understand and I can relate to, and that's my work, because it's all put in place now. It all works really well. It's all working really nicely. You know, it's beautiful. I've got that engine finely tuned, and it's just working. If you come along and you keep messing about and scratching up my alloys because you don't know how to park, or having car accidents, smashing into things, you know, I'm giving you this beautiful car that's all ready for you to go, and you're not treating it with any respect. That's the problem, isn't it? That's just you. Show some respect to the work that we've put in. 20 years worth of work I've done almost. You know, I've done a long time. Yeah, I've done a long time. Show it the respect. I don't want to see any scalps. You know, it's fine, take some scalps, but make sure you've got something on as well. If you don't have anything on, you've closed it, you've done your quota for the day or whatever other crap you want to come out with, but you know, that's the strategy and you're not letting the strategy play out, then get to work on that, get it sorted. I want to see you actually show me a chart where you've actually held something to the 764. Don't show me after either. Show me that you're in the trade. Show me your profit. Show me the open position that you're running. Like I did yesterday. Documenting. Update. Communication. On point. Showing you everything that I'm doing. You know, everything. Just do it. It's going to help you. Monday. Start from Monday. Take a nice break. Couple of days off. From Monday. Crack on with it. I'll find a couple of nice little setups for you at some point in the week. You can just sit around and wait. We can have a conversation. We'll qualify the trade and we take it together. Job done. Yeah, no drama. What's this? Gold. Okay, gold is trying to go. Where's this going up to? Let's see if it gets up to like there. Gold. See, gold shorting opportunity at 45. Yeah, wait for 45. See what happens. If it can get up to like 45, then you're going to look for something like that. It might just stay range bound, so we might go up and then we might drop back down again. I don't know, we'll see. But 45 is definitely that key point. It might stall at the 618, but we've gone through the 50. So when something breaks through the 50, I'll start looking at it with a bit more intent, because we're getting up to these other fib extensions. You know, it starts extending. The elastic band is starting to stretch, so it might go like that and then bosh down again. Have a look. Keep one eye. Again, 764 strategy. So what am I doing with this? Nothing. Wait for it to get to here. Then what? Then we're going to try and put a position on. Scale in a little bit. Not going in with 1%. No, forget that. Going with like 0.25%. Just dip my toe in water. Just wet my beak. Just get in somewhere like that. If you can get up there, that'd be beautiful. Then we short it back down again. We put some stops just above and see. You know, stops would be like quite small then. 10, 15, 20 pip stops. Not much. If it wants to do that. To be fair, I'm not really too fussed about that. That's just trying to show you that is the setup. See, look here now. Look at exactly what I thought it would do. Look at my target, 150. It's gone past it. It's done another 100 points. I've cashed out too early. I've cashed out too early. If I've cashed out too early, what have you done? it wasn't even worth your time getting in. As soon as you got in, you couldn't wait to get out. That's mindset. You need to sort that. And that comes from all the losses that you guys keep sustaining. So these war wounds, you've got scars, battle scars. But you have a fearless leader. You've got a confidence here. You've got strategy. You've got all the tools you need. You just need to start using them. Start believing in them. Hashtag trust the process. You're not trusting the process. You're still lacking, filled with uncertainty and doubt. And, was there ever a doubt? Dax, look at that move. Beautiful. Doubt, look at that move. Beautiful. As a proficient trader, when I'm on point with this and I'm doing it for myself, you know what I would be doing? Forget you lot, snatching profit. I'd be all over this. I'd be like putting one on the DAX down to 764. German, in on that. I was in on this and the Dow anyway, so I've done 2. But yeah, because I've done that one, 3 trades. I'm rinsing the crap out of it. One way to compound your account. Done. You guys, on the other hand, oh look, it's moved 20 pips. Let's take some profit. 400 pips later, I've bagged 400, you've done 40 or so, and it's okay. You get my point anyway. Well, I'm talking too much. See you guys later. Have a nice day, and hopefully you got something out of it. I got something out of it. I got to sound off and shout at you and moan and complain about how shit a job you're still doing, even after all these months of being with me. Yeah. Have a nice day, everyone. Bye. Have a nice weekend, and see you. Catch you Monday.